at ET Infra, we are in a conversation with Mr. Manoj Kumar Dubey, CMD and CEO at Indian Railway Finance Corporation, also known as IRFC. Now, IRFC over the years has played a very important role in financing the Indian railway sector and is one of the major NBFCs in the country focused on infrastructure financing. Mr. Dubey today will highlight the various areas that the company now plans to go beyond its core railway financing activity and what are the plans for the coming year in terms of its business strategy, borrowing, and lending. So, Mr. Dubey, I really appreciate you, joining us out here at ET Infra's video interviews. I would really like to, sort of begin out there at IRFC. You are at the helm. We have started off, with the new financial year. So in terms of both IRFCs, borrowing and lending activities, what is it that we can see forward for FY26?
You see, if you know a bit about IRFC, till the last FY, Indian Railway Finance Corporation was only and only lending to Indian Railway single client. So with the very generous budgetary support coming to Indian Railways, for the last 2 years, they were not looking for any extra budgetary resources support from IRFC. In this light, there is a good opportunity that IRFC now ventures out from a single client to multiple client, but within the railway ecosystem itself. There is a huge scope going forward for a decade or so going forward for the whole railway ecosystem where a lot of capex is required. So a major part of capex is being done directly by Indian Railways, and others are being done by the SPVs, the joint venture things and all. These are the areas where we wish to arrange a very attractive loan to them, so that in the whole ecosystem, the cost of capital becomes lower in the railway parlance. Going forward, in this calendar year, we take January also into it. I mean, up to April, we are talking about. So more than 14,000 crore of loans we've already sanctioned in the railway ecosystem. And going forward, we believe that in this current financial year, we are expected to disburse around 30,000 crore, which is a good amount. More so for the fact that when we lend outside Indian Railway to the ecosystem, my margins are better. So it is around 2x to 3x margin that we are getting. So we believe that going forward, this company's bottom line is going to have a very steep rise and in a very continuous manner.
Right. Sir, you did talk about, the non-railway margins are sort of, doing well for you. So in that sense, if I could, really know right now your exposure to the non-railway segment of it, if not, also in terms of loan disbursement and how much of that has happened, if at all.
So as I told you, we have already sanctioned 14,000 crore in this calendar year. Railway is one of the biggest consumers of electricity. And today the flavor is that railway also wants to be zero carbon and they are looking forward to renewable source of energy. And there is a joint venture of railway called REMCL with whom we have got a joint venture, and they are going to fix the PPAs for Indian Railways. So NTPC, which won 750 megawatt renewable project for the railway, we have funded them 5,000 crores. And margins are, of course, as I mentioned, we can't give you the numbers, but they are far better than what you used to give to railways. And this rate also we won through open bidding. It's not that we got it. So our strength lies in the fact that today we competed into 4 of the biddings, and all the 4 we became lowest. It means that our cost of raising capital plus my overhead is the cheapest in the market. Nobody matches me that. Not only the NBFC but the railway, but the banks also. So here is the opportunity for IRFC to provide the cheapest kind of loan to anybody who is contributing in any manner to the railway ecosystem. This is what 2.0 going forward IRFC is.
Right. So, I mean, sir, that whatever you outlined just recently, then also gives a very good picture in terms of NIM, the net interest margin. If you could give a little bit of idea what are, the current NIMs currently, if it is for last financial year, and what is if you at all have a target, where do you want the, net interest margin to be?
Yes. So if you, though the figures which are already there in the public domain, till last FY, my NIM used to be 1.4. Because railways, there was a fixed margin of 40 bips for rolling stock and 35 bips for projects. Now, this year we have already improved to 1.5, and going forward, as I mentioned, for the new project that we are taking up, my NIM obviously will be more than 2%, which is very good. Obviously, we are not in the arena of doing a risky business and earning more, and then a prepayment comes after 3 4 years. That is not our business. We are doing business for kind of rated projects, which are run mainly by government, quasi-government, joint venture with the government things. Here, the risk is negligible. We are a zero NPA company, and we wish to be sure. Despite that, what we have found that there is enough scope to earn more than what I used to earn, and at the same time, customers are also getting benefited with a very lucrative rates. So that's a win-win scenario that we are creating for these kind of projects.
True, right, sir. So also in terms of your the cost of funds, I'm quite sure your main objective obviously to borrow at the most attractive rates from the market. For FY26, how are those plans panned out? What would be your borrowing target?
Yes. So now we have augmented our efforts to bring in more and more cheaper sources. Earlier, it was a very small team. So bond market, domestic bond, we always track the cheapest loan because cheapest borrowing because of the fact that we are zero NPA and there's a lot of confidence in my company, in the lenders. So that is always there. Apart from that, we have put very focused approach on 54 EC, where my share was very less. And in fact, I can share with you as a good news today itself. For the first time in the company's history, we have got the approval for 10,000 crore zero coupon bond from CBDT. So this we never did earlier. Today itself, we got the letter from Ministry of Revenue, CBDT. This is 10,000 crore. Now you see, this is a facility where I can garner the funds at the rate 6.25 to 6.3. Now this is a kind of money which government is facilitating me at a cheaper rate. Now my job is, when I'm going to the nation building and funding a capex project which is directly in the nation building, I should also pass on this benefit to them. And that is how IRFC is positioning itself as the cheapest source of lending to any of the infra projects which are coming in the nation building. Apart from doing that, also we'll be making good names and good profits. So this is how the business unfolds, and it's a very exciting time for us, I believe.
So that's a very heartening news to get to know today itself on your 10,000 crore.
And I just wanted to add one more thing. We are also putting ECB into the mix, and it's a little tricky, but if it is done in a proper manner, this can also be used to bring down the cost, because Japanese yen we play very well in this country, and we also look forward to other currencies, and obviously there will be some mix of ECB also in my total bag of borrowings.
Right. But this on ECB, is this your first entry, or have you tried?
No, we have been one of the oldest players. Just because for the last 2 years there was no disbursement to Indian Railways, so the last 2 years there was no ECB there. Now we are going ahead with we are coming soon, within a month or so, we are coming with the RFP for raising the ECB also.
Okay. And how much are you planning to raise through ECBs?
I can't share with the number, but ballpark figure will be in terms of 300 million to 500 million.
Okay. And sir, also, in the bond markets or in the larger, borrowing scheme of things, there's always a debate whether it's, institutions like you or private companies, whether to go for the ECBs or not. And it also has its own, advantage and disadvantages. I just wanted to know from you, not just somebody who's heading IRFC, but generally in the finance sector, this trend of, ours opening up to ECBs, how do you see it? I mean, what are the advantages and disadvantages, if at all, that comes today?
You see, first the factual data. If you look at my company's balance sheet or any other NBFC for that matter, who are of my size, there's always a mix of ECB. So that proves that ECB has been a good mix. Had it not been a good mix, nobody would have gone for the ECBs. Oh. For example, my company in 2021, we raised 30-year bond. 30-year bond of nearly $750 million. If you're getting a tenor of 30 years, it is itself proving that the customer also has confidence in you, and you're also going to get benefited for the long tenure bonds. Having said that, there's a healthy mix. What I find in the market is we are putting around minimum of 15% and maximum 25% into the total mix. Yeah. Now, what has been the experiences? Because future, you can always look at the future with the past experiences. We have got a very good experience with the yen. With the hedging cost, adding to that also, it has been extremely good in the last decade or so, I can tell you from my company. Dollars also, earlier we had a very good experience. Today, yes, because of, the rupee dollar exchange rate and all, with the cost of this, but these things are always played on. To formed up answer to a question is yes, ECB is a good mix, and we will keep on mixing it. What percentage we want to mix? That's something that is what the fund managers have to see and do. That how best we can give best kind of cost of the capital for the company so that we make more margins.
True. True. Just a little bit of clarity. The RFP of 300 million. This is dollar denominated. Will it be?
I won't be telling that right now
Okay.
because this is something in the pipeline. What
Right.
I could share with you is yes, this company is already in discussions, and very soon means within a month or two, we are coming out with our RFP. Denomination we can't tell you right now because this is something which it's still in pipeline.
Fair enough, sir.
Yeah.
Sir, staying on to the bond market itself, green financing is a topic, to be compliant with ESG norms, and it's a trend globally. We are also picking it up. Green bond issuances, has those been, that IRFC has, gone into? What has been
Yes.
IRFC?
So we were one of the first to do it in the past. We've already done. We had the green framework, and we did it in the past. For the last 2 years, as I mentioned, it was not there. In fact, the bond issuance that we're talking about, that we're going for ECB, it is for the green only.
Ah, great.
So for the fact that, as you know, that it's a public domain that we won 5,000 crore loan for NTPC Renew. That is complete green.
True.
So that particular thing we wish to fund through green funding. The issue that we have flagged to the government of India and to other institutions, in fact, government is already working on that. Within the domestic bond market, there is no green framework right now.
Ah,
So that government of India is already engaging with all the stakeholders. The discussion is on, and we believe that very soon there will be a green framework for domestic bond market also, which is a need of our government is already working very actively on that. When we believe that sooner than later it will come, and then the impact of that greenium, that green premium that you talk
no.
about, what is the impact in the domestic market rates? That is to be seen, and I believe that there surely be the same kind of enthusiasm in the investors of the India the way it is shown by the pension funds of the overseas countries.
True, true. And I think the larger taxonomy around, green financing, I think that aspect also will, I think the government is, working on.
Precisely, you mentioned precisely the same thing we are talking. The green taxonomy government is, I think there are very active discussions going on. There are news in the newspapers also. And the last week also, I read one news coverage that's already all stakeholders are contributing their views. They are giving their views. Government is very open to take views of every stakeholder. And they want to come out with a green taxonomy for the domestic bonds also.
True, sir. So, moving on to larger from the financing part, on the projects, if you could, let us know about the exposure. I understand in the railways, obviously, you're, synonymous with the financing, but your key projects that you're currently engaged in, and what are the various, obviously, I
You
think.
say, you mentioned, and I told you that earlier there was only single client business that we're doing. Now, my mandate says that anything backward forward linkages we can do. What we found that numerous SPVs, special purpose vehicles, who have created last mile, first mile connectivity lines for the railways as a concession agreement, where finally the lines has to be transferred to Indian Railways. The loans they are having on their balance sheet is very high cost loan, 9.5 to 10.5. Now, this is exorbitant in my view. And just because we also never out to them and reached out to them to finance, so they were very hard pressed with this kind of very costly loans. It's very easy to refinance them. We are already looking into their projects and we are doing the due diligence. And very soon you'll find that in the ecosystem, we have taken a challenge as well as a business proposition that all the SPVs who are already there in the joint venture model, other model in the Indian Railways, and wherever their cost of loans are very high, we wish to refinance them. And again, it's a open bid to everybody, but we are very confident that we'll be offering the best kind of rate available.
So this refinancing or service or offer,
Refinance, yeah.
this would be any particular project or segment or sector, if you could,
Obviously, there are, as I mentioned, there are SPVs.
okay.
I don't want to name them right now because it's a very active constituency, but there are numerous SPVs in the PPP projects where there is 26% minimum contribution from one of the CPSEs of the railways, but rest 70-75% is coming out from the private parties. So these SPVs as a unit, they have taken the loan from the banks. And those rates, we believe that is on the higher side and there is enough scope for refinancing them at a very attractive rate. That makes the projects also very viable. And it's a kind of very good favor to the whole ecosystem of the railways where the SPV will get stronger. The concession period will also get finished earlier if they are reaching their total earning that is supposed to be. And it will be a good thing for the future SPVs also, where we will be willing to finance them once they get the approval from the Ministry of Railways.
True, true. And when do you think that some of this refinance opportunities?
It is very quick. Maybe few of them comes in this quarter itself.
Oh, that's good. Sir, I understand with your loan book and everything. What is it that you are looking forward beyond the railways or the ancillary sectors associated with the railways? You did talk about the forward and backward linkages, but other areas are also open to you. I mean, does you get provided the opportunity? Would you go into other sector financing sectors such as the aviation or the others? Does that scope remains open to you?
So aviation is a little far off right now, but what is nearby I can share with you. You see, one that Government of India told me to have a whole of government approach, and railways means not only Indian Railways. So the moment is clear, then the one very lucrative and very important segment in the country is metro railway, rapid railway, and the urban railways.
Right.
So earlier, you see, if you know the history of metro railway and all, mainly it is joint venture between Government of India and state governments, and fundings are coming on bilateral level.
Yes.
We had a good success with bilaterals, but now we feel that there is a need to replace those bilaterals, dependency on them. And country wishes to execute these projects at a very quick time level. We as a country cannot have a scenario where there is a time lag and very slow progress in the metro railway. Appetite is huge. Now, that's a business that we want to look forward to. We are a company who are leasing in terms of 15 years or 20 years to Indian Railways. So we are already into the long-term leasing prospects. Now, metro railway businesses, we are very actively going to look at them. We want to give them a very lucrative kind of lending facility, which is even better than the bilateral loans if you take their total cost, including the hedgings in the long term. This is a business which is, we believe that will soon become a mainstay apart from the Indian Railway business to us. A. B, Sagarmala and port connectivity and port augmentation is also one of the very important things going on. And every major port is linked with the railways. And the dry port Concor, where I have been Director of Finance for 6 years, I know their business model. So everything comes back to the dry port, which is hinterland of the country. Yeah. So all ports which are getting linked to the railways, we will also have a look into their project financing, because finally railways also is going to be part of the major ports. Yeah. Third thing is, logistics portion, there is a huge demand of multimodal logistic parks. Now, they also need money. And these multimodal logistic parks are also linked to the railways. So having my past experience of working with Concor, I believe that there's a lot of scope, and we will be very actively looking forward to them, reaching out to them. And if they need good amount of fund, we are very readily willing to look at their projects and see to it that they are also funded at the cheaper rates. These are the few items that I've outlined to you, and this has got if you put numbers, they are going to be very huge numbers.
Okay. So are Gati Shakti cargo terminals are under?
Oh yes, it is the same thing when I'm talking about multimodal logistic parks. Gati Shakti cargo terminal, the technical name is multimodal logistic parks, where the road connectivity is there, and the rail connectivity is there.
Right. I asked this because the Gati Shakti cargo terminal, at least from the DFCCIL, has been one of the success stories. And then there was a component.
Oh yes, and that is required in the country. This is precisely I'm mentioning that those projects also will be having a very close look, and we're very happy to arrange a very cheap kind of loan to them.
Right. Sir, all of these sectors, starting from metro and the others that you mentioned, have you had some bit of exposure to them in terms of lending right as of now, or this is?
Because the thinking started just a couple of months back, and we are very, very actively working on that. But I can assure you that things are in pipeline again.
Right. So, sir, last, some, number questions in terms of your, loan book as of date. If there are any numbers you can share.
My total loan assets today stands at 4.65 lakh crore, which is in fact incomparable to my other peers also. And my profit this year, FY25, we ended up at 6,502 crores, 6,502 crores. This is my PAT. And we are one of the companies who are giving dividends also on a very regular basis. So so far as my loan asset is concerned and the future is concerned, we are rising in a very steep manner. And now we'll have consistency. And I mentioned that now we're looking for the projects where NIM is better. So
Yeah.
I can only assure you that my yield and PAT will be showing a better margins now and numbers now. And that's the focus from the investor's point of view. If my margins and my PAT is showing a better growth, it will have a direct impact on EPS, and that is something good for the investors also.
Right. You said with the new projects coming in, I think earlier you alluded that 2%, a little bit above 2% is what your number is going to be.
That's the very conservative estimates we're taking.
Right. And you hope to achieve them in FY26?
Oh, yes. For the new projects I'm talking about. If you take my whole balance sheet, the others are at 1.4. So I mean, total mix cannot be 2%. But any new project that we're taking, there the NIM will be more than 2%.
Right. And how much the total overall NIM do you expect to be in FY26?
Overall, really, because you see in a balance of 4.6 lakh crore where the NIM is 1.4. You see, if you totality of goes, it will take a time. But you have to look in the perspective of IRFC 2.0, where we are doing more of non-railway business.
So I really appreciate you joining us out here, and thanks for I was hoping to have your participation out there at ET Infra Rail Show, and looking forward to hosting you out there. Thank you.
Thank you so much. Thank you. Thanks. Same here.